If you swing trade, simultaneously day trade multiple markets, or even if you're just considering a switch in product for your day trading, you're going to need to take into account a number of considerations in order to identify and select good markets to trade. Now I'm going to run through a checklist of basics so you can get the gist of it and search for yourself. First of all, the type of instrument. Now you obviously need to ask the question of which type of instrument it is that you're looking to trade. It could be a stock, option, forex, futures, CFD, etc. Now of course you don't want to pigeonhole yourself into a certain type, but there are nuances between each one, and besides, you may be constrained by the broker that you currently use. The type of class. Now this is what the product is or is based on. It could be an equity, a fixed income, index derivative, forex, or a commodity, for example. And while a market is a market, there are different price drivers for each, different participants with different objectives, and different hallmark behaviors. You may find it more of a struggle to trade your trend-based strategy in a mean reverting market, for example. Cost of trading. What exactly is it going to cost you to trade a product? And I'm not just talking about the cost of any commission or spread involved. You have to consider how much cash that you need to put up in margin in order to trade. You also need to consider what the value of the minimum price increment is, ticker pip, the normal daily range of the product, and consider these factors in conjunction with the size of your trading account. Like, it's no use deciding to trade the DAX on your $5,000 account just because you can get $2,500 intraday margin for it. Liquidity. There are loads of products that will meet your specific requirements to trade them, in theory. But when you take liquidity into consideration, your view on what you can and can't trade will probably change. An important consideration, therefore, is going to be daily volume. Is there enough volume trading on a daily basis to be able to get in and out of the market without too much trouble? But total volume only tells part of the story. The other factor is the order book liquidity. This means how easy is it to get in and out at every price, even when the market is moving quickly. Now you can go from one end of the scale with something like the E-mini S&P 500 that normally has many orders during regular trading hours, to the other with the RBOB gasoline where prices move very quickly and the order book is generally thin. Which you choose depends on your strategy and your objectives and your depth of your pockets. Market condition. Now there are certainly some strategies that are more robust than others, and they might work relatively well in several types of market conditions. However, there are also some great strategies that struggle when a market shifts gears. So in particular, if you're looking at trading a number of markets at the same time, it's important to assess the current conditions of any market you're looking to trade, as well to keeping an eye on those that you already trade. A good starting point is to do a quick multi-time frame analysis. Market correlation. If you're trading multiple markets, it's sensible to diversify. Although it's important to recognize that there are times when everything becomes correlated. Much of the time, markets tend to react to related markets, and they may ignore others entirely. If you trade all the same sorts of markets, you are likely to be amplifying your peaks and your troughs, which isn't particularly desirable. Where to look? Finding different markets can be a pain, and not everyone knows where to look. But it doesn't have to be tough. A list of products available from your broker is a great place to start, although many do specialize in certain types of instruments. A great way of identifying stocks is by using a stock screener. However, not all of them are especially helpful as they neglect to include crucial data such as daily volume. Finviz.com has a nice screener, and in fact, it's a great starting point for other market types as well.